If I didn't move so quick, I'd probably lose my balance. Gotta keep momentum in the moments that I'm challenged. This my magnum opus, man, what's happening? If you think I'm hopeless, why don't you just let it happen? No one cares about the Goose and do this scavenge from your coast that you forever focus at it.
What's up, guys? It is Thursday, December 8th. It's 10:28 a.m. and this is the deep dive on the Basel III Accords. It's here, as well as I came across something called e-gold. So I think it was back in 2008, before Bitcoin even was, the white paper was released. There was a digital currency that was using gold as like the settlement mechanism on their kind of currency exchange platform. Then they got like indicted and stuff like that. So I'm going to go through that because there's something in there that mentions Ripple and XRP. So you're going to find that pretty interesting when we get into that. But first off, the Financial Stability Board, the crypto asset market is highly interconnected, which may lead to rapid contagion and spread of stress among market participants. The FSB is proposing recommendations to address these risks. So this was October of this year, October 11th. And in here, it's talking about how in 2022, the FSB, as mandated by the G20, has examined regulatory and supervisory issues raised by crypto asset activities with a focus to address financial stability risks. It goes into it here. They're talking about how they're proposing a high-level recommendation to promote a consistent regulatory framework. The report describes outcomes of initiatives in the interconnectedness of crypto asset markets, applicable international standards and regulatory and supervisory approaches to crypto asset activities, as well as high-level recommendations seek to promote the consistency and comprehensiveness of regulatory, supervisory, and oversight approaches to crypto asset activities and markets, and to strengthen international cooperation, coordination, and information sharing. The recommendations apply to any type of crypto asset activity and associated issuers, service providers that may pose risks to financial stability, and are in complement with the high-level recommendations on global stable coin arrangements. The FSB has been working closely with the IMF, World Bank, the Basel Committee on Banking Supervision, the Committee on Payments Infrastructures, and the International Organization of Securities Commissions, and the Financial Action Task Force to ensure that the work underway regarding the monitoring and regulation of crypto asset activities in markets is coordinated and mutually supportive. So here it's saying the FSB is soliciting comments from the public on these recommendations. A set of questions for this purpose are included in its proposed framework. The FSB encourages all interested stakeholders to participate, and they're due December 15, 2022. So as we go into here, it's talking even today, Basel Committee clarifies how climate-related financial risk may be captured in the existing Basel framework. Basel Committee issues responses to frequently asked questions to clarify how climate-related financial risk may be captured in the existing Basel framework. Clarifications intended to facilitate consistent interpretation of existing Pillar 1 standards, give the unique features of climate-related financial risk, and should not be interpreted as change to the standards. Part of the committee's ongoing and holistic approach to addressing climate-related financial risk to the global banking system. So they're talking about how banks should consider how to incorporate climate-related financial risks in their interpretation and application on the existing Basel framework, and continuously develop their capabilities and expertise in relation to climate-related financial risks. And they're talking about how, therefore, allow for flexibility while promoting a globally consistent implementation of the Basel framework. A lot of international kind of coordinated events are happening right now. So the FAQs are part of the committee's work addressing climate-related financial risks to the global banking system in support of its mandate to strengthen the regulation, supervision, and practices of banks worldwide with the purpose of enhancing financial stability. So that's what the Basel III Accords are doing. They're trying to address some of these concerns and kind of do this regulations as supervisory practices for banks worldwide, with the purpose of enhancing financial stability and making sure they're holding certain reserve requirements. So in pursuing this work, the Basel Committee is examining the extent to which climate-related financial risk can be addressed within the Basel framework, identifying potential gaps in the current framework, and considering possible measures to address them. And this is ongoing. So we can keep going here. They're talking about it all today. And now we can go into the actual Basel III, the International Regulatory Framework for Banks. So as you can see here, it's saying that Basel III is an internationally agreed set of measures developed by the Basel Committee on Banking Supervision in response to the financial crash of 2007 to 2009. The measure is aimed to strengthen the regulation, supervision, and risk management of banks. We're going to watch this quick video about understanding Basel 4 in 4 minutes, because it's actually like, it's supposed to be Basel 3, but they're calling it Basel 4, but Basel 3 never happened, I guess. But yeah, so we're going to watch this, get a quick little summary on it, and then dive into the documents that I found.
The financial crisis, credit institutions have grown a lot stronger. A lot of regulation has been implemented to strengthen the financial stability and consumer protection. Currently, credit institutions hold less capital in reserve when dealing with low-risk loans than when dealing with high-risk loans. It's common sense and good business practice. The proposed Basel IV Capital Floor Initiative will put an end to this sensible link between risk and capital holdings and is a threat to growth and job creation and potentially to financial stability. When calculating the amount of capital that they need to have on hand to cover the risk associated with their loans, credit institutions use two methods: the standard method and the advanced AIRB method, primarily used by SIFIs, which are the largest players. When using the standard method, the average risk weight associated with a housing loan is 35%, and when credit institutions use the AIRB method, the average risk weight is 15%. That's a difference of 20 percentage points. Now, why is there such a big difference? The AIRB risk weight of 15% is calculated based on the risk of the bank's actual customers. The standard method's 35% is a global one-size-fits-all risk weight, not based on the bank's actual customers. Risk weights are important to credit institutions. They determine the amount of capital the credit institution must keep on hand to cover their loans. The higher the risk weight, the more capital the institution must hold in reserve to protect against losses. In this respect, the output floor is key. The floor means that an AIRB method bank must now hold 72.5% of the standard method. Previously, when the Standard Credit Institute held €100, the AIRB Institute held €50. Now, with the Basel floor, the AIRB Institute must hold €72.5. That compromises the link between risk and capital, because the increase in capital does not reflect an increase in risk. This means that an institution with low-risk portfolios must hold capital equivalent to that of an institution with high-risk portfolios. The low-risk institution's costs associated with loans like mortgages and loans to strong, healthy businesses and households will increase because capital is not free. An increase of both cost and capital that doesn't reflect the low risk of the loans that they provide their customers. By removing the link between risk and capital holdings, Basel IV will have negative consequences for the cost of housing for ordinary families and slow down growth and job creation in Europe. Basel IV will make it much more attractive for credit institutions to deal in high-risk loans than the low-risk loans that help homeowners to finance their homes and local businesses to expand and grow. But there are better solutions. Authorities must continue to work to standardise the framework for using AIRB. By standardising AIRB, the risk weights will better reflect the credit institution's required capital reserves of their loans. Besides, it's not even necessary. On January 1st, 2018, a backstop equaling 3% of the institute's balance sheet will be introduced. So even institutions with a very low risk portfolio will always have a minimum amount of capital to withstand customer loss. Let us continue the AIRB journey and allow credit institutions to continue to offer sound and healthy mortgages and commercial loans on terms that reflect their low risk, and empower credit institutions to support and nurture growth and employment, instead of obstructing it.
All right, so now we understand Basel IV. Basically, they're just kind of holding banks accountable, or trying to hold banks accountable to hold a certain percentage of the reserves on their balance sheet based off of if it's a tier 1 asset, tier 2 asset. I believe they made paper gold a tier 2 or tier 3 asset and physical gold a tier 1 asset. So that's why we're seeing these banks, central banks, load up on physical gold. And that's why you shouldn't be holding paper gold, because it's not going to be worth what the equivalent amount of a physical gold would be. So let's keep going here, because what I was going through was the Office of the Comptroller of Currency, because they had back in December 2016, they were exploring special purpose national bank charters for fintech companies. So we can look at that in here. And yep, December 2016. So in here, it says the introduction. Some are marketplace lenders providing loans to consumers and small businesses. Others offer payment related services. Others engage in digital currencies and distributed ledger technology. And still others provide financial planning and wealth management products and services. So basically giving these fintech companies a green light to engage in like kind of banking activities in a sense. But so like, digital currencies, distributed ledger technology. So when I was coming across this, I came to this right here. So people were putting their comments in, and Ripple actually put a comment in too in January 13th, 2017. But I want to read this guy's first, because this guy said, I am Dr. Douglas Jackson, founder of two companies that were the pioneers for two of the industries being contemplated as possible candidate domains for national bank charter. In 1996, he founded eGold, which was the first successfully privately issued electronic money and direct peer-to-peer payment system, described by the Financial Times in 1999 as the only electronic currency that has achieved critical mass on the web. 1999. Then beginning in 2000, I and the other eGold founders launched and then fostered a second new global industry, independent businesses competing to provide currency exchange services between privately issued alternative currencies and conventional government issued brands of money. Then it goes into it here. So they were doing as much volume as and kind of held as much gold as and more gold than the gold reserves that were back in the Canadian dollar. They were a powerhouse. So the system was routinely processing over 75,000 spends per day, settling an annualized payment volume nearly 3 billion USD equivalent. Along with eGold, he was a pioneer in another respect. Despite proactively approaching the U.S. government in 2005, seeking regulatory clarity and providing vital assistance to law enforcement agencies around the world in hundreds of investigations from 1999 through 2008, eGold was singled out by the USSS for criminal indictment in 2007 as an unlicensed money transmitting business. So it's like the same things happening today, right? Like this lack of regulatory clarity. This guy was trying to seek it, and then they were like, oh, yep, give us all the information. Then bam, they decided to turn on him and then hit him with an indictment. So the government action against eGold was a case of first impression, as noted by the prosecutor. Digital currencies are on the forefront of international fund transfers. eGold is the most prominent digital currency out there. It has the attention of the entire digital currency world. The world is a bit of a wild west right now. Same stuff they're saying now. People are looking for what are the rules and what are the consequences. And they still are. So the case was resolved by a plea agreement that laid out a blueprint for such rules, detailing a novel template for a compliance model consisting of a bespoke hybrid of requirements blending relevant elements of existing regimes for money service businesses and depository institutions. So as we keep going down here, he starts to go into comments as far as this special purpose kind of bank charter for fintechs. And he talks about Basel III. So what elements should the OCC consider in establishing the capital and liquidity requirements for an uninsured special purpose national bank that limits the type of assets it holds? With very specific exceptions, the Basel III guidelines prescribe for a standardized approach to capital and liquidity requirements are as suitable for a special purpose national bank as for a more traditional institution. So basically, the Basel III guidelines kind of are tied into this. And then the base money to be issued and circulating via the system have developed eliminate these risks together by means of a continuous 100% reserve underlying any and all base money issued and outstanding. So there are two categories of base money in the system, each linked to an 100% reserve with a specified single physical commodity or existing national currency. The commodity-linked backed currency is referred to as AUG. As with the predecessor eGold system, the base money of AUG is backed by good delivery gold bullion and allocated storage in certified repositories. For the type of currency pegged to a national currency, The 100% reserve must be comprised of central bank money or the corresponding anchor currency. Both eliminate cross-currency exposure and reliance on exchange markets. So in here, he's talking about the traditional remittance model and how a digital currency system with a kind of gold backing reserve to this new digital currency could fix the traditional remittance model and bring stability, as well as cut out the cross-currency conversion risks. In here, he says, the certainty that such an enterprise would never require a government bailout could it conceivably afford a competitive advantage. In particular, the ability to hold money 100% backed by central bank money or gold may be an attractive alternative when renewed financial disruption inevitably occurs, and that's where we're at. In it, he starts to go on, and he's talking about advocates of unbacked cryptocurrencies refer to national currencies as fiat currencies, a somewhat pejorative term to highlight their discretionary nature, playing to the popular oversimplification that depicts government-issued money as conjured out of thin air. Bitcoin was the first digital cash to attract widespread attention. So he's talking about Bitcoin and all this stuff, right? And then we go down a little bit, and he says, the metric that attracts the most attention and which is widely viewed as validation of Bitcoin's monetary logic is its exchange rate relative to other currencies. This exchange rate is entirely a function of demand for Bitcoin, a significant component of which stems from speculative trading by participants seeking capital gains. The appeal of Bitcoin as a speculative trading vehicle is enhanced by the lack of any general mechanism for detection of unreported gains, such as a central counterparty obliged to file IRS form. It's likely that the trading experience of the vast bulk of speculators do not predate the aberrant conditions that have prevailed for the past decade, during which time buying the dip has been the key to profitable trading for every class of tradable security. In contrast, XRP, the native currency of Ripple, is effectively a fiat currency. At its inception, Ripple Labs created 100 billion units of XRP, 20 billion were retained by the creators, who were also the founders of Ripple Labs. The creators gave the remaining 80% of the total to Ripple Labs, with the XRP intended to fund operations. The monetary policy of Ripple Labs has been stated as well. We will engage in distribution strategies that we expect will result in a stable or strengthening XRP exchange rate against other currencies. In other words, only the forbearance of the people sitting on the vast pool of play money prevents release that would kill the golden goose. They're calling it the golden goose. XRP is the golden goose. Unlike government-issued fiat money, no entity has the ability or responsibility to buy an XRP in sufficient quantity to quell a full-on panic situation. The best that can be done is to slow or halt for the release of additional money. So there can't be a panic on XRP or a straight out mass kind of amounts of XRP coming onto the market to kind of demolish it, or in a sense, drain the value. So that's what we're seeing. He's talking about Bitcoin, how it's, just for speculative purposes. And then he says, in contrast, so XRP is real value, effectively a fiat currency, and says that there couldn't be a full-on panic in that situation with XRP. And then it goes into it all here. So it goes into more stuff, but that's what I want to show you there. And then if we keep going, we can see that Ripple actually did their own comments. So this was January 13, 2017, exploring the special purpose national bank charter for fintech companies. And in here, it goes through kind of their thoughts on it all. But then down here, you have citing the Committee on Payments and Market Infrastructure, Bank of International Settlements, World Bank. Also, you have them citing, for instance, banks can use XRP, the digital asset to the Ripple consensus ledger, as a bridging tool that streamlines liquidity provision for their interbank foreign exchange transactions. Using XRP in this way allows banks to reduce the costs, enhance the transparency, and extend the global reach of their cross-border payments. And then you see the Basel Committee on Banking Supervision, Bank for International Settlements. They're citing that as well too. If the banking supervisor oversees several different types of financial institutions, it should, in accordance with a proportionate approach, prioritize the allocation of supervisory resources based on the institutional risk profiles and systemic importance, taking into account the different mitigation approaches adopted by the institutions. So as you can see, all of this is coinciding together. Even right here, a risk-based and proportionate supervisory approach does not call for the OCC to relax the rigorous supervisory standards that it applies to all national banks and federal savings associations. As the G20 Global Partnership for Financial Inclusion has highlighted, the concept of proportionality does not imply dilution of requirements under the Basel core principles for effective banking supervision. Rather, it puts supervisors in a position to adapt approaches to accommodate the full range of providers relevant to financial inclusion and to the potentially rapid changes in scale taking place in some markets with the advent of digital financial inclusion. So this is all tying together. And this guy has been in the background here, but he developed e-gold 1999 through 2008. It was the single digital currency out there that it was taken on these other kind of first digital currencies or concepts of digital currencies. It was taking it on. And it's because they backed it by gold. You can see that beginning 2010, his team at Fulcrum IP Corporation developed the next generation system that merges the monetary and transactional logic of e-gold with unprecedentedly sophisticated AML and other compliance elements. So before Ripple was even launched, 2010, he might have a role in, Ripple's development. We might have to look into that. But as you can see, they've been planning something like this for a long time. And maybe the government kind of went after him because they were already working on it as well too. They were, they picked the winners and losers. So then I was going through these patents and I was going through here and we saw this gold price. Transitional effect leading to new equilibrium. Emergence of the disclosed system is likely to be accompanied by or even give rise to transitional effects that are themselves highly disruptive. Large-scale bailments of gold into the reserves underlying the disclosed gold-linked based money may lead to large changes in the valuation of gold relative to existing currencies, akin to what one might imagine occurring when a corner is established in certain commodity markets. The perception of a rising gold price combined with the superior liquidity of the gold-linked base money relative to other vehicles for owning the value of gold may lead to a self-fulfilling prophecy as demand for the disclosed currency drives up its exchange rate, causing a transfer of wealth to early adopters and igniting additional demand. In addition, emergence of an AGO effect with the disclosed gold-linked currency trading and currency exchange markets at a premium over the price of gold itself may serve to further intensify incentives to bail gold into the system. While such transitional effects could lead to dire pronouncements about an insufficiency of gold, the system is designed to foster eventual reestablishment of a new equilibrium, so a repricing of gold, albeit likely at gold prices not previously observed relative to USD, the euro, and other legacy currencies. So we're getting the confirmation of what we've been looking at, guys. This disclosed gold-linked base money attached to gold. It's like a reincarnation of e-gold. And they're saying that it's going to make the early adopters of it, may serve to further intensify incentives to bail gold into the system. And it could lead to, it has superior liquidity, it has the stability, and as well as it's going to cause a transfer of wealth to early adopters. So I believe they're talking about XRP here. It's no surprise. So this is the same guy. This is a Google patent. He was filed this December 12th. December 23rd of last year. And he's been filing since 2013, 2018. And this is the same guy, Douglas Jackson. So he's over here basically in this letter back to the OCC, basically saying, Bitcoin's speculative, but check out XRP because it's theoretically a currency and they're likely to not have a run on it and this, that, and the other thing. There's not going to be a panic. And basically he was touting XRP and Ripple as a superior product for kind of what he envisioned or was trying to build initially. And then now he's coming out of the woodworks here with that Google patent. And he's basically kind of insinuating everything that we've kind of been researching and looking into this patent here. So systems and method for a private sector monetary authority. Systems and methods are provided for a payment system for use with base money of one or more alternative currencies. Steps may include administering accounts, each of which belong to one or more account owners. And then, so at least one of at least one of the one or more alternative currencies may be based on at least one commodity and may be continuously backed by 100% reserve of at least one commodity. So with everything going on as far as BRICS with the new unit of account, speculating that they're going to have their own digital currency that they transact with that's going to be backed by commodities. Then you have this coming out of Dr. Jackson Douglas, where he founded eGold back before Bitcoin's white paper was even released. Then you have him commenting on the OCC's proposal for the special purpose national bank charter, touting Ripple and XRP. And then you have even Ripple commenting back to this letter as well too, right here. So to me, the stars are aligning. We know how it's going to play out. And I believe the Basel III Accords is going to have a tie into this, because if they don't have the gold on hand, I mean, what other asset to get than XRP and kind of back it by gold like that, digital gold. It's the reincarnated version of eGold XRP is. So that's it for this video, guys. I will see you in the next one.